Hello, everyone. So good to see you here at the Bottom Line Live to talk about your favorite subject, bookkeeping. I know that it is everybody's favorite subject because they tell me every week how much they love talking about taxes and bookkeeping. Nobody gets stressed out from it. Nobody's ever worried about their taxes. They just want to spend all day talking about it. But realistically, since it's tax season, I figure there might be questions that people have, or at least the questions that they ask me, and I figure that I can help you guys out by answering some of those questions live and on this webinar, so that in case anybody else has these questions, we can answer them and people know what to do for their CPA. That's what we're going to talk about today. What does your CPA need from you? What do all these things mean? I might even do a screen share and show you guys some sample reports if y'all are really nice to me. No, I'm just kidding. If I can figure out how to do it, because I haven't tried to do it yet. Otherwise, I'll just be describing things and you won't be able to see it. The Bottom Line Live. We're sharing this as we do. Share, share, share. So, my wonderful audience who joins me every week, and everybody else watching on YouTube, on videos, we want to talk about what does your CPA need from you for your taxes. Some of you have already filed your taxes and you're awesome and amazing. And some of you aren't going to file until after the extension for, September 15 or October 15. Either way, I know you all have your mind on it because it's about to be April 1st tomorrow, and tax day for individuals is April 15th. So all the CPAs are going crazy trying to get all this figured out, trying to get all of your information, and making sure they get what they need so they can do your taxes. So definitely, as I go through this, if you have any questions, let me know so that I can answer them, because I am here for you. Jerry, if you have any points you want me to go over, Nano, if you have any questions, things that you run into with your clients, let me know. In the meantime, I'm going to see if I can figure out how to do a screen share, which I should have practiced before this. But let me see if I can log into the QuickBooks sample company and screen share so I can show you guys some of these reports so you know what they look like live in the flesh. I know a lot of you have seen them before, but I'm just going to go over them and we can explain it. Okay, so I got the sample company open. Let's see if I can figure out how to do a screen share. I don't know if I can. I might just have to keep talking unless someone knows how to do it. What happens if I click stream? I don't know what happens. Yeah, I think I'm just gonna not, in case it kills the video stream. On Zoom you just click share screen and it's real simple. So I don't know. But if anybody knows how to do it where I won't break things, please let me know and I'll do it. But in the meantime, we're going to go over stuff, and by next week, I'll have figured out how to share my screen, and then I can show you guys things, so it'll be more interesting. Okay, so the first thing that your CPA is going to need from you is going to be your financial reports. I'm looking at this list of things I'm going to go. And there's so many things on this list, guys. I think that we're going to do a part A and part B because I don't think I can cover all of these things in one half an hour webinar. So I think we're going to do a couple of them. And then maybe on the next one I'll actually show you the reports that I'm talking about now. But Of course, most of the time I'm talking about people who own businesses. Most of my clients are individuals who own businesses, small businesses between, 100,000 a year revenue and 5 million a year revenue. I have some bigger clients that are at a 15 million a year revenue, some e-commerce guys, some other guys. But the reporting is the same. If you don't own a business, this won't apply to you as much, because all you have to do if you don't own a business is basically give your CPA your W-2, tell them if you have any property or assets, things like that. But that's about it, because W-2 people don't get a lot of deductions. So if you are a W-2 person and you're making a lot of money on a W-2, probably recommend starting a business, even if it's a side business, so you can deduct business expenses. Right now you have no deductions as a W-2 employee, other than, your charitable donations and things that are personal deductions. So this mostly is going to apply to businesses. But again, I know most of my fans, my fan club owns businesses, and that's why they're listening to me, because otherwise, who really cares about business tax documents? So without further ado, and with no screen share because I did not manage to figure that out in these last 2 seconds that I tried, we are going to go over that. So let's say you have a brand new CPA, like let's say you just signed up with TaxHive, like some of my clients have. What are you going to need to give them? The first thing they're going to need is to know your EIN. What does EIN mean? It means your employee identification number, or employer identification number, rather. It also, there's a lot of different ways that people use that abbreviation. They use EIN, they use TIN, which is the same thing, tax employer identification number. They use tax ID. They all mean the same thing. It's a specific number. It's kind of like a social security number, but for a company, that the IRS will assign you when you become a company. You send them a letter, or your CPA or your bookkeeper do, and they will assign you an EIN. So that is your individual ID number for your company. It's very important. Keep it with your legal documents. Then the next thing they're going to need is your previous year's tax return. So that'll be not your refund. Some people use return to mean refund, and that's not what we mean. We mean the actual document that was filed, whether it was e-filed or paper filed. All of the information about your company will be on there. We need to know whether you are being taxed cash basis, accrual basis, what all of your deductions were last year, so we can make sure you're not missing any for this year, all of that stuff. So even if you become a new client of mine, a new bookkeeping client, we're going to ask you for your last year's tax return. Now, let's say it's a brand new company and you don't have that. That's fine. You don't have it, you don't have it. You're going to have to give other information. But if you have a last year's tax return, then your new CPA is going to want it. If it's the same CPA, they will probably have a copy of your last year's tax return because they filed it. So those are things to keep in mind. Okay, so your yearly financial business reports. So there's a few different ones. And depending on how your business operates, it's going to be the different ones that are needed. I'm saying a lot. I want to have the screen share so I can really show you guys, but I'll just go over it with you. So the first one, the most important one that every CPA, what if someone is behind on filing and does not have a prior year return? That's what Jerry is asking. So that would be kind of the same answer as if this was a new company. You would send, if you've never filed a tax return for that company, you would just send the information, like the reports that I'm about to go over with you. If you have filed prior but you didn't file last year, you're going to send whatever tax return was the last one you filed. And then that way they'll also know if the last time you filed your taxes was 2018, brother, you got a lot of work to do to catch up. Your CPA is going to have a lot of work to do. And by the way, if you try to give it to your CPA right now, you're going to get an extension. Actually, you're late on business returns. They were due 3/15. But basically, give them the last one that you have that's done, and then all the current information that they'll need, that they'll ask you for. That's a very good question, Jerry. Thank you. And hi, nice to see you on here. Maybe you can show me how to screen share on here. Maybe I have to switch to Zoom. Okay, so now the profit and loss statement is the most important report that your CPA is going to need and ask for. If you do not have bookkeeping, they're basically going to ask you to make a profit and loss report statement, a statement report, whatever you want to call it, profit and loss report, profit and loss statement. If you've ever given your CPA information for your taxes and you did not have bookkeeping, you will know that they might send you a questionnaire, or they might ask you, what are your business deductions? They need to know your full income. Okay. Yeah, I was hoping I could screen share from Facebook Live, but fail. So I'll get on Zoom next week so I can show you guys the reports. But if you don't have a P&L, then you're going to need your full income, which goes at the top, right? That's your income on the profit and loss, and then all of your business expenses. So if you did not track this throughout the year, you're basically going to have to do that thing that I talk about, which is go hide in your closet with a box of receipts and a computer and all your bank statements and a couple cups of coffee or espresso and figure this out, because you need to know what your business expenses are for your taxes. You need to know how much you spent on marketing, how much you spent on office supplies. If you have a home office, how much is your home office rent? How much is your home office utilities? Those are percentaged out based on your square footage you use for your office. If you use your vehicle for business driving, for business deals, then you need to track your business mileage. You need to track all your actual business expenses for your vehicle so that your CPA can determine which one gets you the most tax deduction. Any contractors that you hire, anything like that, like we've gone over this before, I will probably go over it again every time. It's always like, what are the business expenses? Anything that is a usual and ordinary business expense, you need to track so that you get the deductions. I just want you guys to know how important this is. I literally have a new client who came to me, and we have to redo his 2020 and 2021 because the bookkeepers didn't totally understand how he did how money moved in his accounts, and he had about $100,000 of income in one company and 94 cents of expenses. That means that he paid taxes on $100,000 profit, or $100,000 minus 94 cents. And that's why we have to redo his bookkeeping, because his bookkeeper didn't make sure they had all the expenses. The other company was maybe $38,000 and had $30 of expenses. He paid taxes on all of the income minus $30. So this is very important to keep track of this. Okay, Jerry asked a good question here. He said a lot of people are confused between what CPA does and what the bookkeeper does. For someone who doesn't know, is it the responsibility of the CPA to build the P&L when you prep to file, or is that my responsibility to have ahead of time by myself or with my bookkeeper? I know the answer, but I think this point confuses people. Who does that? Who does what? Yeah, that's a really good point. Your CPA is not going to build your P&L. They will ask you for a list of expenses, or they will ask you for a P&L. And if you don't give them one, they will take your income and you will pay taxes based on your income. And that sucks, because your income for your company could be $500,000, but your expenses, including payroll, could be $450,000, and then you only are paying taxes on $50,000. But if you don't have a list of all your expenses, you're paying taxes on the $500,000. And the CPA, especially at this time of year, they are burning and churning. They're not looking closely often. I mean, hopefully they're looking kind of close, where if they said, hey, you've got no deductions, maybe go get me a list. But it's not their job to put together the list. Their job is to take the information that you give them and plug it into their software and tell you how much you owe for taxes. So if you don't have this, you're going to pay way more taxes than you should. And if you don't have time to do it yourself, or you don't know how to do it, then hire a bookkeeper. Or Lexi says, or they will charge a lot to do your bookkeeping if they do it. Yeah, some CPAs have like a bookkeeping department for that exact purpose, because people haven't finished their P&Ls, or they don't have all the information. But they will charge you, CPA rates to do it, and it's not the same. If a CPA is doing bookkeeping, it's just for the purpose of filing your taxes. Often it's not going to be as detailed or as thorough as if you're doing it throughout the year. And it's not going to be usable for anything else other than your taxes. So that's a really good point, Lexi. Thank you. So if you don't have time, you don't know how to do it, or you haven't been doing it, and you're wondering why you're paying so much money in taxes, get a bookkeeper, reach out to me, reach out to somebody, and start keeping track of it throughout the year. Because even if you only do it once a year, you're losing deductions. You don't remember what that coffee was. You don't remember why you took that $200 out of the ATM. And really, you took the $200 out of the ATM because you paid for a business meal. And now because you don't remember, you can't count it as a business expense and it's going to be personal. You don't remember that $5 that you spent at Starbucks was for a business meeting that you had with a potential client. And because you don't remember, it's going to be a personal expense. So that just sucks. So you want to have your P&L so you're not in the same situation as my new client where he paid so much money on taxes because he didn't have any expenses listed on the P&L because the bookkeeper that worked for the CPA didn't understand he was missing a bank account or something, and so there were no expenses showing. So, for me, if I saw that, I'd be like, there's no expenses. This isn't a P&L. Give me, where's your expenses, because that's my job. My job as a bookkeeper is to get accurate and clear financial documents that you can use for your taxes, that you can use for managing your company, not just, a piece of paper that says this is done. So this is your profit and loss is your most important financial report. You have to have it, whether you want to spend the headache of doing it, for 3 days at the end of the year to try to get it all together, or whether you're going to be smart about it and either have someone do it for you or keep track of it throughout the year. You have to have it, so might as well do it right and keep track of everything. Another thing that I talk about all the time that's very important for this is to have a separate business and personal bank account. Even if the business bank account is a personal account that you've assigned only for business because you don't, have the documents that you need yet to open a business account, it's fine. Just keep it separate, and keep it separate from the very beginning, because there's no way you're going to remember a year later what that cup of coffee was for, whether it was business or personal. You're not going to remember what you bought at Target, whether it was office supplies or diapers for your child, or even for a diaper raffle for a baby shower, So you have to keep track of this. It's really important to do it throughout the year. If you really can't, then at least have a separate business and personal account so you know that all the transactions out of that account are for business. And then you can put together a profit and loss. If you really can't do it, like I always recommend QuickBooks, but if there's Tax Hurdler, there's even Excel spreadsheets. Like you can take all of your transactions for the month and categorize them in an Excel spreadsheet and sort them so you can total it. Like that's what I do. I don't do that. Don't try to make me do that. But if that's all you can do that. Okay, so Jerry's asking, if someone has been commingling business and personal and halfway through the year they realize they need to separate accounts, what should they do? Okay, so first of all, they should open that new account right away and take all of the auto debits and everything that come out of the personal account and put them to the business account. Yes, I'm going to talk about Mint in a second, Lexi. So they should separate out right away, like all the business income, if they have any auto, direct deposits, anything like that, put it to the new bank account, like right away do that. And then go through, or have their bookkeeper go through the personal account and separate it out, what's business and what's personal. It takes a lot more time that way, but you got to do it. You got to figure out what's business, what's personal, and then on all the business deductions, you have to go through it and label them so that the CPA knows where to put them on your tax return. They can't just put them under business expenses. Like sometimes we ask clients, what's this for? And they say it's a business expense. Thank you. It's good to know that it's business and not personal, but we also need to know what it was for. Is it marketing? Is it office supplies? Is it auto expenses? I mean, obviously if it's obvious, then it's obvious, but sometimes it's not obvious, and that's why we're asking you. My little light just turned off and it got dark in here. Here we go. So that's why we're asking you, because we want to know what it's for. So that's what you should do if you haven't done it up till now, is first of all, run Don't walk, get that new account, get all the account, the auto debits and where things go straightened out, and then go through and do the bookkeeping for the personal account so that everything that's personal is just marked personal and everything that's business is business. Okay, so now Lexi made a really good point. There's a software called mint.com. It's free. It's mostly used for personal if you want to know how much money you're spending on things, but it's also great on personal side if you want to know what you're what you're spending on donations, what you're spending on home office, things like that. You can track it in there. You can use it for your business as well. It's a little bit closer to maybe Quicken than QuickBooks, but it's free and it's usable, and it's a good place to start if you have nothing else. You could even make a separate one for your business and a separate one for your personal, so you could track it if you really wanted to. So that is a great resource. There's also Tax Hurdler, which comes free when you have a Mint Builder subscription, which I think is like $40 a month right now, and you get the Tax Hurdler for free, and you get your silver or gold with that. So that's as well. And then if your company's starting to make money, $60,000, $100,000, then you might want to switch to QuickBooks and really get the full use out of it. Because there's a lot of things that Mint won't do and Tax Hurdler won't do because it's made for very limited bookkeeping. So QuickBooks is the one that's going to get you everything you need. So that is your most important thing that you need for taxes. Now, there's other reports that you need. Jerry says, yes, you can create tags and categories in Mint. It's a bit cumbersome, but that's what I used to do when I first started out. Yeah, me too. And I would track my home office expenses on there. I would just tag them for, tax documents. I would track my donations on there and some business expenses before I had a company, basically. That's how I did it. But there would be, not before I had a company, but when I was just freelancing. And then I started a company, with an EIN. I just opened my QuickBooks and got a bank account and all that. But Mint is a great resource that Intuit has, and it's free. It's mint.com. I've had my Mint for probably almost over 15 years. So it's great. And it does a lot of things too. So it's very useful to take a look. Okay, so your most important report, and I will say it over and over again, is your profit and loss. Your profit and loss has all of your income on the top, all of your expenses and your cost of goods next, and then your profit on the bottom. And that's what you're paying taxes on, guys. As a business, you're paying taxes on your profit. As an LLC, as a sole prop, and as an S corporation. C corporations work a little bit different. I'm not going to go into that too much. But in general, you are paying paying taxes only on your profit. So that's why you want as many deductions as you can have. Obviously, real deductions, things that have an ordinary and usual purpose of business. And then those are deductions, and then you're paying taxes on your profit. You also, if you have payroll, that should be in your QuickBooks. It should be in your bookkeeping. If it's not, you want to have your payroll reports. And payroll, guys, is not the same as I transferred money to myself. Transferring money to yourself is a distribution or a draw. Payroll is when you're actually running a salary and paying payroll taxes. So whether or not you're paying payroll taxes shows whether it's a distribution or payroll. You do pay taxes on distributions. It's not considered an expense because you're paying yourself profit. You don't pay taxes on payroll, or you pay your own income taxes, but it's a deduction on your business expenses. So if you own an S corporation, you have to have payroll, and you get that as a business deduction. Even if you're paying yourself payroll, it's a deduction. So it's very important. Okay, the next most important report or statement that your CPA is going to want is called a balance sheet. And again, we're going to do this with a screen share next time so I can show you guys these. Your balance sheet is exactly what it sounds like. I mean, these are great names, right? Profit and loss. That is exactly what it sounds like. It shows your profit or your loss at the end, as well as your income, and all your expenses have how they got there. Your balance sheet shows your balance. So it's going to show the balance of every bank account, what is in it as of that date. So let's say you run it for December 31st, 2021. What was the balance as of that date? That's what shows on your balance sheet. Also, any loans, what's the balance on the loan? How much did you owe as of December 31st? Or any assets that you have, whether it's, accounts receivable, because you've done work and people have to pay you, whether you have investments or you lent other companies or your other company's money. It's all on there, and it's going to show the exact balance. And there's more to that, but let me answer this next question. Jerry says, if someone did distributions all year thinking it was payroll and they caught it before they filed for the year, what should they do? It's a very good question. We run into this all the time. If you've been doing distributions all year and you haven't run a payroll and you're an S corporation, you basically convert some of that money to be payroll, and then you pay payroll taxes on it. But this is like an emergency handling, but it's not the best way to do it, because as soon as you do that payroll, you now owe payroll taxes on all of it. So think about it like this. Remember when you were W-2, or some of you are W-2, maybe your payroll is $1,000 a week, but you don't get $1,000. You get about $700 to $800 of it, depending on how you filled out your W-4. Your employer also pays about an additional 10% in taxes, all the different ones, Social Security, Medicare, whatever. So it's about 10%. So now, as the employer, you're paying all of that. So let's say you go, okay, you paid yourself $100,000 in distributions for the year. So you want to, your CPA says, or reasonable salary or whatever, is $50,000. So you go, okay, I'm going to convert $50,000 of that to payroll, which you have to do. My CPA has told me that the only S corps he's ever seen audited, are the ones that didn't have payroll run. So keep in mind, you definitely have to have payroll. So now let's say you go, okay, I'm going to convert this $50,000 to payroll. Okay, let me finish this sentence and then I'm going to answer that question, Jerry. So you're going to convert the $50,000 to payroll. You are paying about 30% in taxes on that right away. That's what I was getting to. So it's better to do it throughout the year for cash flow purposes, so you have that money. And hopefully you have a sacred account and you're setting aside money for taxes and it's all in there and you can do it. But Jerry is giving me the next logical question, which is, what if they don't have the money set aside for payroll taxes to pay when they adjust the distributions like that? You're kind of screwed, because you have to file it and then you instantly owe the IRS that money. So you have to talk to your CPA about what's the least bad problem in that situation. Is it going to be least bad that you didn't run a payroll, or is it going to be least bad that you owe the IRS 20 grand right away? So it's kind of like, make the best out of a shitty, terrible situation is the only thing I can say, because you took that money. It does need to be a payroll. If you can't pay the payroll taxes at that point, you should open a sacred account and save some money. But I don't know, that would be a CPA question, because they'll let you know based on your taxes what's going to be the worst thing to do. You know, you might have to borrow it. You might have to take out a line of credit. You might have to ask your mom. But I would always recommend that you pay it rather than not paying it, or rather than not having a payroll. But I also know sometimes you got to do what you got to do. So you just got to make the best out of a bad situation, and you might have to coordinate with your CPA and see what they think is the least bad route in that case. But most of the time, yeah, as soon as you file that payroll, you're going to owe the IRS money right away. On $50,000, you're going to owe 30%, so whatever that is, like almost $20,000 minimum. And it all depends on your W-4 and this and that, but as a broad number, it's usually around 30% of what we see. So keep that in mind, that you want to set up payroll and do it throughout the year so that you don't owe a ridiculous amount of money at the end of the year. I have one client who has, and don't do it again next year, exactly. I have one client who had a $1.7 million profit on a brand new company. Profit, not revenue. And so his CPA wants him to convert $250,000 of that into payroll. And now he's going to have to come up with the taxes for that. So that's like over $50,000 in taxes right away. And I don't know, maybe he spent it all. I'm assuming he has money because he has a pretty good profit, but that's a big chunk. I don't like sending money to the IRS like that, but we do what we need to do. So yeah, don't do it again next year. You handle the dangerous situation. You run a payroll for the end of the year. You scrounge money to pay those taxes. Because that doesn't mean you're not going to owe taxes when you file your taxes as well as a company. You may or may not. This just means you are putting in your legal basics of running payroll as a company that's taxed as an S corp. So you might still owe more money after that. It's not like it's this or this. It could be both. You might owe that $30,000 plus another $10,000 on top. But it should make it so you owe less money on your taxes at the end of the year. So that's the benefit of it. That and being much less likely to get audited. Of course, I can't promise you're not getting audited, but you're much less likely to get audited if the IRS sees that you're running a payroll and you're paying payroll taxes. So keep that in mind. And then right away, set up payroll for the current year. If we had to do a manual payroll conversion like that for 2021, which we had to do quite a few of, then we're going to set you up on payroll for 2022, and we want to know what day we can run that payroll every month so you don't have that same situation of having to come up with $20,000, $30,000, $50,000 at the end of the year for that. So we are basically at the end, and I knew I wasn't going to get through all this, so we're going to do part B next week. I'm going to figure out how to screen share and show you guys these reports and go over what your CPA needs from you. If you have any questions, feel free to write it in the comments. You can send me an email. You can go to my website. It's solvencynow.com, maya@solvencynow.com. You can reach out to me on Facebook Messenger. You can reach out to me on LinkedIn. You can reach out to me on Instagram. It's all either going to be under Maya Weinreb or Solvency Now Bookkeeping. And I hope this was helpful. We're going to do more next week. I hope I'm demystifying these reports and what CPAs are asking for and why it feels like we're speaking different languages when we speak to our CPAs. So I'll see you again next week, same time, 7 p.m. Eastern for the Bottom Line Live. Thank you all so much. Bye-bye.